Westpac has ended the bank reporting season with a flat result. SBS finance editor Ricardo Goncalves joins me now with the details. Ricardo, some big challenges ahead for the banks.
That's right, Janice. Three in particular: economic, relating to slowing credit growth; competitive, as small lenders become more aggressive; and conduct, amid the fallout of the Banking Royal Commission. Now, Westpac isn't immune to any of that, posting a flat full-year cash profit of $8.1 billion. It's held its total dividend at $1.88 per share. So, with each of the big four having reported, what's in store for the next 12 months? Westpac may have been the last to reveal its full-year result, but the theme was the same.
We're in a low-rate, highly competitive market, which means we'll continue to see pressure on our margins.
Westpac's business bank and New Zealand unit performed well, but like its competitors, consumer banking was flat and it's simplifying its business, reducing the number of products on offer. Westpac wraps up the bank reporting season where combined Australia's big four banks posted a full-year cash profit of $29.5 billion, down 5.5%.
We've seen credit growth starting to slow, margins are under pressure, and in particular the banks have had to take some pretty sizable costs through the P&L off the back of remediation compliance.
Much of that relating to the ongoing Banking Royal Commission. For Westpac, those costs hit $281 million.
The Royal Commission report is out in February, which we'll need to deal with.
It, along with its competitors, may also have to deal with the opposition's plan to rein in negative gearing and the capital gains discount if it wins the next election.
When you have uncertainty about the tax environment or the regulatory environment, that can play into people's willingness to do things, and I think we're seeing a bit of that now.
Industry professor Warren Hogan says the key for the banks will be whether the housing market continues to deteriorate.
The market is right on a knife edge at the moment. It's soft in Sydney and Melbourne. If we see another step down in housing, even a detraction or contraction in credit growth, then this could really hurt bank profitability and could bring the dividend under question.
Westpac says 70% of its customers are ahead on their repayments, but with funding costs rising and the US lifting official interest rates, mortgage rates here are under threat. Today, NAB lifted some of those rates for new customers.
It's going to be a real test for them next year whether or not they can continue to pass on those increased funding costs while they've got a softening housing market.
Despite the headwinds, the financial system remains strong.
Their capital has pretty much hit now the targets that have been set to make the banks unquestionably strong.
And Westpac shares rose 0.5% today, but NAB and ANZ did better.